Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, April 3rd, 2025. It's 11:23 a.m. Eastern Time as I'm starting the video, so we're just a couple hours, not even a full couple hours into the trading day, but a lot of fast-moving markets, so as always, you're going to get more frequent updates from me. I think I've done a pretty good job of getting out the three major inflection points, at least the way I traded it today. Started out with the reversing, covering shorts at the lows in pre-market. Told you I was going to go long for a bounce. Followed up, as I mentioned in the last video, I will post more frequent updates, little stuff or fast stuff in the comment section below the most recent post or posts if it's related to, let's say I did one on Bitcoin and then one on the stock market, then I'll, if there's an update on Bitcoin, I'll go back to that previous post to keep it kind of related on topic. Either way, so you can come in and check those. But took the bounce, got about 1+% on NQ, and then was convinced. Of course, I always say the charts are dynamic, and so was my analysis, that we were going to go out, take out the lows, have another leg down, which we did. So that's still in progress. We're not out of the woods yet, but I just posted a little short bit ago that I've covered all my shorts again, index shorts, long. So I'm going to just do an update right now, and it almost certainly won't be the last update today. But Amazon looks good too. I'm in the fast-moving market, it's real easy to focus on trading the indexes. NQ, or whatever your thing is, ETFs or futures. You just get more bang for your buck on the Nasdaq 100 and small caps, Russell 2000. Which are RTY for the futures, or IWM, or any of the leverage variants. In an active trading market, you're not holding these things very long. I mean, in a fast moving market. And I'll let you decide how much, if any, leverage you use. Where I find leverage effective, I'll go in a multiple of my entire account value in NQ at times, but I'm also offsetting. I have diversified positions. So, the way leverage works, and I'm going to give you, again, stay away from it if you're new to trading, investing. It's the quickest path to financial ruin. But, if you have a portfolio of X, let's just say your portfolio is 100,000, and you then leverage up, you could have whatever that number is in futures, 100,000. If you have an offsetting hedge, that's another 100,000. Let's say something that is a direct or indirect hedge. And then you also have diversified positions. Then you can have a leverage portfolio that's 5 times that, but also diversify. That's the thing. You can, sure, some people will push their entire portfolio and all in leverage on one position, Bitcoin, and you're going to be very happy or very, very sad if it goes against you. And over time, again, 1 or 2 really bad days, like a day like today, imagine being long, coming into the day long, or yesterday, thinking the tariff things were going to be a non-event, or chasing that initial rally post-market. I told you, for the life of me, I couldn't, a bunch of folks were buying the NASDAQ 100. I watched the futures pop over 1.5%. And I guess that's either just before or after Trump came up to the podium. I turned the TV on then to listen. And then, like, why? What were you, and whatever. They were speculating the market was going to rally on good news or bad. And then it went the other way. So my point is, especially ETF traders that didn't get out till today, sold at the lows or got trapped in. And that's what I often talk about, is trapping. Bear markets do that. They have just like bull markets do the opposite, especially after after a bear market ends. Think 2009, the March lows. Think COVID, right after the markets bottomed in March, or was it April of 2020? What happens, especially the big drops, you start just running and gapping up, and I call that trapping. So those that were buying the dip, and chasing the April, I called it the April Fool's rally. I told you yesterday was simply, in my opinion, an extension of the April Fool's rally on April 2nd. I said that in yesterday's video. And so let's say you chase that rally, and let's say you were a JCL again, like most people are. Most retail traders buy only after prices have been going up, and they tend to sell or want to short after prices have been falling. So you chased it there. And you, let's just say you're just trading ETFs. So you bought QQQ, it closed right there. Well, guess what? You opened up, you gapped down 4.5%. So what it did, it blew past any reasonable stops, and that's what happened. That's what I call trapping. So then you have those longs just dying to get out on a bounce, and you also have a lot of, what I call hesitant short sellers, flexible traders that might want to short the market but didn't want to do it because it's been going up. Again, to me, that's when I like to short. Just like I like buying when I'm bullish, I like buying pullbacks. I like buying things on sale. I don't like paying full price. So that's what happens there is then you gap down so much, and the retail crowd, especially those that buy things like SQQQ and all that, they would have to chase a gap down of SQQ. Let's see. There's where SQQ closed. Here's where it opened, somewhere around there. They would have had to chase a 10% gap up on it. That's not a very objective entry. In fact, I think I even spoke to that last night, the risk of a big gap down that would deny an objective entry to short sellers. So look, everything's going the way I figured it would go, and we could certainly, let me just say it again, most certainly just keep going down. Support levels in a bear market, especially, and this is the important thing, guys, this is why I do these videos, especially if this is the beginning of the next wave. And if you want to be an Elliott waver, P3, the primary wave down, is always the most powerful. I've traded many bear markets, many corrections, many bull markets. You hit that impulsive wave, and what happens is this is a good, very good support level, as I mentioned earlier. But support levels like that act as mere speed bumps on the way down, and sometimes they just get smashed through like they're not even there. So here's the thing, guys. Okay, so I'm not trying to, what do? Do you take it? Do you not take it? It's easy. Don't fall in love with it. If you want to try to game a bounce, there's the support. Now, you don't want, if I have the line at 449.47, you don't want to put a stop loss at 449.46. They're probably going to clip it. Even in the volatility, there's what I call momentum-fueled overshoots, where you have a lot of downward momentum or velocity going in. You tend to overshoot the actual support level that would normally contain the bounce and then reverse. I use the analogy of a pitcher throwing a fastball, hits a catcher's glove. Glove's going to snap back. When the ball hits his glove, his wrist will snap back, and then it's going to come back forward. That's what I refer to as a momentum field overshoot. So you want to put your stops a little bit outside the range that the momentum might carry through, and that the nefarious forces, the big trading desks, the algos, will run out, clear out the stops before they turn around and buy and reverse it. So all I can tell you definitively is this is good support. All I can tell you is we have positive divergence right now. And like I said in the last post, at minimum right now, I'm looking for a little bounce here. I think that's an easy potential target, 466.10, which if you did it, also reversed at the lows, which are so far the lows. I'm not counting my chickens before they hatch yet, but that's where I reversed. That'd be about a 3% bounce. I'll take that all day long for the amount of NQs and VIX shorts and everything else. I trade them collectively often. Bitcoin is Bitcoin and NQ are going to trade together. Just Bitcoin goes up and down more. VIX is opposite. So those are the kind of things. And believe me, I've already reversed a couple times. Came into the day short, reversed lows, went long, reversed short again, long. So this is my fourth inflection today. Is that right? Third today, coming in. So, and I could do it again. I don't see right now, again, I wouldn't be going long if I thought the odds favored us crashing down through there. But I will not sit there and hold on to longs if we go down. Remember, the big picture, I always keep an eye on the big picture. Next target is T3, down here, 413, then T4, so forth and so on. But I always, when I'm just in trading, I take it one day at a time. And when the markets are fast moving like right now, I'll take it minute by minute, second by second. All right, so there's your updates. Not much more than I added. Let me go through the market leading things because I've made mention there. So Apple is not at that. That's just a great, great support level. But remember, I do this collectively. So if you have 4 or 5 of the Mag 8 stocks at support at any one time with evidence of reversals likely and the others aren't there, then that's where you're probably going to reverse. If just one of them hits support, you want to see more of them. So Apple's a little bit shy of really good support. But if the rest bounce, what happens is the market's money starts flowing back into the ETFs and futures, and then it causes all these guys to go up. the buy programs kick in other words. So Apple still, as we know, has the biggest stock buyback in history. And, again, I'm sure they fired off some of that right here that juiced that rally a little bit back to the 200-day moving averages. But as I mentioned recently, it's amazing how well the charts are playing out. Look at that back test. That red line's the 200 exponential moving average, just like it pulled back there and it bounced off it. Apple just trades well to the 200s. Now we're well south of it. And we're kind of in no man's land between support and that's an old level right there, an old price target. But let me go over the rest. Microsoft, really good support, that yellow line, 364.54. Not all the way there yet, so we could have another thrust down. I'll ride out a little thrust to a new low because I'm going to look at all these. But if all these levels start getting taken out, you start getting big red candles down through. Here, let me color this up red. You start getting big red candles, especially on a daily closing basis. But then you also have a nice trend line that comes in on Microsoft. See this purple trend line? It goes all the way back. How far? That sucker goes back for quite a while. That comes in a little bit below it. But what I'm showing you is collectively most of these market leading stocks are at or very near really good support. NVIDIA right there, look at that. 10, I have it at 101.80. Pretty much hit it to the button with positive divergence. So it's this positive divergence to me. Right now I gave you some near-term bounce targets, but I made clear to say in there I could easily see a run back to the 200s if this positive divergence plays out. Starts to firm up, we get some bullish crossovers in the PPO. It would most likely coincide with some other friggin' change from Trump, some softening on the tariffs or, kumbaya with, China and everything and coming together and saying, okay, well, we are not going to retaliate as hard. And boom, you could set up the stage for a potential big rally or not. That's it, guys. It's simple. Support either holds or it doesn't. If it doesn't hold, react. Me, often I won't react all or none. In other words, I'm hard long now for the second time today. At this point, it'll probably be more of a scale out. All the reversals I've done today, the 3 I've posted for you, have been hard reversals from fully aggressively short to aggressively long or vice versa. Fairly aggressive, of course. I told you not all in stuff, right now. Volatility's high. You don't have to... when you're just a swing trader and the market's volatility is pretty low, you need to put in more money to make a decent amount because the daily swings in the stock market in a just a typical market, only about 1% a day, is a pretty good move in the indexes. And this kind of market, when volatility is high, and that's what I speak to. This is why I keep giving you the active trades. When the VIX wakes up, volatility expands and the daily gyrations then go 3% as a normal day. Today is a 5% day in the NASDAQ 100. And so, again, you don't need to, and this is risk management 101, guys, you don't need to press it as hard to make good money. I always say bulls make money, bears make money, pigs get slaughtered. Don't be a pig. And don't trade outside your skill set and wheelhouse. I'll talk about active trade and what I'm doing just because some people like to hear that. But the big picture, has only gotten more bearish today. Whether we bounce or not, and whether it's a good bounce or not, the longer term charts, let's just not forget. Always remind yourself to look at the long term charts and what's going on out there. This is QQQ on the weekly chart. This is where we went, I highlighted the bearish engulfings as a likely top, said you can short there. Not a swing, not a short-term swing trade, not a day trade, not active trade, the top trade targeting these 50+% drop in the market. And if you did that, you're still profitable, but there's no point in giving back all those gains now. The market should, as I've said, remain below the recent the trading range back here. And of course, it should also remain below the 200s now. Maybe an intraday, intra-week pop above them, but it really has no business solidly regaining the 200s. So your stop could be lowered if you're shooting for the prize, the big drop. Somebody asked, I think, about the bearish engulf. The bear flag continuation patterns. Yeah, maybe still. If we look at it on the weekly, remember yesterday, and I remembered saying this after the video. I told you that the flag looked a little longish on the daily. But then the day before, right here, that little kickback was getting a little long in the tooth, so I was going to remove that on the daily, the bear flag measurement. It's still there on the weekly, and I even commented on the video the very day before. I think it was day before yesterday, that all that matters on the weekly is this candle we're working on here, and so it's still red. And we can even have that nice counter trend bounce that I'm talking about, guys. We could still have it this week. Go all the way up here intra-week. Here, let me draw it for you. Remember, this candle is a moving candle right now. It changes every day, and it gets finalized on Friday at 4 p.m. It's the weekly candle. So what you could do, we could have a heck of a nice rally here, or not. But if we do, it could go all the way up here, even turn this candle green, but then turn around by 4 p.m. on Friday and close down here, right? Break that support we're on right now, or right close to, and then still have it, this flag, flagpole, bear flag, impulsive move it down. There's the measured target. I left the line on the weekly. I never removed it on the weekly. So that's still a potential in play. And this is the thing. This is what I tried to do, is I try to thread the needle on any trend, bull or bear. And, there's a lot of, when you just look at a weekly candle like this or these, there's a lot of money to be made within their long and short intra-week. Again, I'm probably the most granular trader you'll ever come across, as far as not just calling, where things are going, but when possible, gaming all the little squiggles in between. And that's why I go to the 60-minute charts. This is what I'm talking about. These are little counter trend bounces. Counter trend bounce, moves up and down. This is what it looks like on the 60-minute chart. So these are all very profitable for active traders. These are all 1+%, micro trends, if you call, within the larger trends. So anywho, let's just get back to the market leading stocks. So there's NVIDIA at support. Amazon, one of my favorites right now. I took a starter position, a pretty good one in Amazon. Took one when I reversed, and actually right before I started. It's the only, when I was still short today, took a starter position there, and then added to it when I fired that post off to you that I've hard reversed all my positions, and because that one was at nice support too, right here, a 180-ish, and so far so good, and big positive divergence. And again, this is Amazon, and it's knocked down harder than all the other Mag 7 today. Who doesn't want to own Amazon, And so you're going to get dip buyers that'll come in, institutions and individuals. This is, that was a divergent low. We did get a tradable bounce. This is also a divergent low, just a bigger one, which says we could potentially rally even more. That was a bounce of about 9% right there, which I'll, as an active trader, take all day long. Hit that 205.61 resistance / target. And so now we could bounce even more. So long and strong, my friends, at this moment. And you know me. If you don't know me, you know me today and now, that I will flip on a dime. If I see something I don't like, I've used that analogy from Heat, one of my favorite movies, the scene between De Niro and Pacino when they sit down at the restaurant and he follows them in, pulls them over, and they're talking, one's a cop, one's a career criminal. Most of you've probably seen the movie, and that whole line where he says, how do you get attached? You have a girlfriend, all that. He says, I've learned I will, don't get attached to anything you are not willing to walk away from in 30 seconds or something along those lines. That's how I am in the stock market. I'll throw longs away so fast, your head will spin and go back short if the markets tell me. Right now, like I said, see Alphabet. You can see a little bit if they want to jog down once more, but if it does, 147.70 is really nice support. And again, that's it. So collectively, you have all these Mag 7s coming up or near support. A lot of times, if most of them get close enough, that's where the buyers are going to step in. You're not going to have each and every one hit the exact same comparable support at the same time. I'm sorry. Meta, nice support there. Even though it just took out the 200s, it also hit support, and that's it. It also has like so many positive divergence. So there it is. So like I said, today, we went down. We made new multi-month lows, increasing the odds the longer-term targets are going to be hit. But as I've said all along, my long-term targets that were laid out last year, was never a go from, there was my market top zone laid out last year. We went a hair above it, but I stuck with it there when we went in that trading range. Frequent cover, still expecting downside break. So at no point did I ever think or expect or could even imagine the market could go straight down. The market never does. The market goes down like this. And this is what we do here. We swing trade. We try to exit shorts there and turn around and profit longs. So when the market drops, 30% or 40 or 50, we can make, if we trade the trend correctly, several times that. And that's it. And then again, it's hard for those new to this. And if you're trying to follow me, unfortunately, there's no possible way to create a follow me site where you can follow every trade. So you're going to have your own trading plan in place. I will communicate changes and my thoughts as quick as possible. But if you don't have the skill sets, the time to commit to it, or the inclination to actively trade, just formulate your long-term trading plan and set your stops, set your price targets. You can always micromanage. That's the takeaway too from the active trading stuff. By micromanaging, let's say you are just trading the long-term weekly charts, but then I post these little, opportunities where you're likely to get, like right here. I was adamant for several days there that the risk reward was no longer favorable for either adding new shorts, or in my opinion, even staying short, but especially to add new shorts. At that time, I said, even if we go lower, I won't look back and regret that. What I said is, the risk reward was no longer favorable. It wasn't worth the odds of us going down were not outweighing the risk of us bouncing back to test the 200s. And that's so, we gamed it long. And at least at that point, a longer term swinger trend trader wouldn't have, if they took that advice, would not have added to their shorts there or taken new shorts. Rather, they would have waited till we back tested the 200s and they'd be in a much better position today. Okay, I'm going to stop it here. Continue to hunt. I'm going to tear through charts, sectors, bonds, commodities, everything else. But I'm hyper focused right now on the markets. If you want an update on anything else, I already told you. Gold, silver. Somebody asked. I made a comment. Yeah, silver hit that good support level I showed you this morning in the futures, and it's still there. Let me show you. It's right here. So we had a little bounce earlier, but that's really nice support on SI. And gold, of course, is here. Let me show you the ETFs for you. We'll do that. I know a lot of you trade that. Gold's getting a flight to safety bit. It went down. Remember, big divergent high. There's that uptrend line I give you on the daily. I've been trading on 60. We still broke that. Like I said, there's sell signal there. A little kickback rally, flight to safety bid, which brought silver up with it and GDX. But then somebody asked me, I even posted that for you. So there's silver. This is the comparable support on silver. We hit today's lows. And I got that chart out to you earlier today. There's the bounce so far, and it's still at support. And we'll likely bounce more if we bounce up. I don't have super strong convictions on the metals, but somebody asked this, excuse me, earlier today, and I mentioned, they said, why is GDX bouncing? Well, GDX is bouncing because gold bounced. Gold's getting a flight to safety bid. Most traders are running around like a chicken with their head cut off right now, scrambling, and so you're seeing money flow into gold. But this is an objective short entry or add-on. We still haven't hit my first and sole target on GDX right here. And so I did post this exact chart. We're about an hour ago, but we're in the same spot. We're right there. And I said it offers an objective long, a short entry there to backtest. Again, I'm not super gung-ho on that. I don't have right now a position in GDX. I had some dust in long-term accounts that I also covered this morning. I told you I've reversed my metals and miners active trading account. I'm just using silver for futures benefits, also tax benefits too. My primary trading account's a taxable account, so I tend to do ETFs and stocks in the IRAs and tax deferred, because every time you make a short-term trade, a holding period of less than a year, it's taxes ordinary income, and they're going to hit you, hit at the highest tax bracket. So Uncle Sam's going to take a big grab of everything I make. So futures have that beautiful taxation benefit where your gains are taxed as both long and short-term income. And so I'm kind of digressing, but just telling you their active trading stuff. So now where I was going, if we have another big leg down, GDX can. We're not there yet. Take it on the chin because they are equities, not metals. You know, they mine the metals, but at the end of the day, they are stocks. So far they had a nice bounce, and again, that's an objective re-entry add-on. If we make any new high anytime sooner, it'll be a marginal new high. And here's what it looks like on the daily. Also, so that's I believe an objective re-entry, new short entry add-on. If you want to take a shot on GDX, there's your uptrend line. There's your big divergent high, big negative divergence. PPO is poised to make a bearish crossover, and I think GDX in the coming weeks to months might rally with the market here a little bit, but looks pretty toppy to me. Okay, let me get the video out to you guys. There's not much more to add. We've come off that bottom a little. That's the chart I gave. That's the 3 month. I give you the 6 month there. Yes. Remember, like I said earlier, we still have that divergence across the board now on the 60-minute charts of both the futures and the ETFs, QQQ and SPY, on the 60 minutes that I like to see, all the way out to the daily time frames. So although you may not see it now, may look like the world's coming to an end with all these tariffs, I am very much open to a considerably bigger bounce, maybe back to the 200s again. I'm also open to, if we don't get good news in the market, you know, because we just had some additional bearish evidence today. We've started that we're going to start the next leg down. When? And we'll know. I think when we take out those support levels I just highlighted on QQQ and SPY, and especially if the divergences get taken out on the 60-minute charts and we no longer have that, that would support a case that we could have another leg down. And if you want to know to where, the same targets I've been giving you since last year, late last year. My next swing primary trend, long-term swing targets still, and has been since all the way last year. I may have moved these. If updated would have been when I put it there, 12/19/24, 4/13 right there. You know, if I drag a line, even an old line I've had before, and I move it, then it's repositioned. I'll say update on. So 4/13, then 3/24, 3/84/25. You can find this chart and some of the older archives, trade setups. Look for the QQQ weekly chart. I have these. This is the daily, but the same targets on the weekly. And so if this rally fails to materialize and we take out, you can see the same support right here. It's about on my, yeah, this is it, 449.70. We take that out. We've already hit T2. So my guess is, even though it is still support, this is T2. We hit it last year before we made a marginal new high. I think if we go down there, the market's just going to melt down and we'll go to T3. That's my current trading plan is as of this moment. If we take out these lows and I get back short again, to not cover, most likely swing positions till we get down to just above 413. All right, let me wrap this up so I can concentrate on the charts and make any more adjustments if needed. This has been Randy Finney with Right Side of the Chart. Have a great day.